Here's a story that could reshape the entire global mining landscape forever. And it's happening right under Wall Street's nose. While most investors were distracted by political chaos across the Atlantic, two mining powerhouses just announced a deal that's about to create a copper empire so massive it might make even the biggest commodity bulls nervous. European trading floors saw a modest uptick on Tuesday morning, with regional equities climbing cautiously as market participants remained glued to the unfolding political drama in France. The aftermath of Prime Minister François Bayrou's dramatic exit on Monday continued to send ripples through investor sentiment. The continent-wide Stoxx 600 benchmark managed to edge up by 0.1% within the opening 10 minutes, while France's flagship CAC 40 index posted a slightly more optimistic 0.2% gain. But here's where it gets controversial. While everyone was fixated on French politics, a seismic shift was quietly taking place in the commodities world that could fundamentally alter the global supply chain for decades to come. The bombshell announcement that sent shockwaves through mining circles involved London-based Anglo American, whose shares rocketed an impressive 5.8% following news of their groundbreaking merger agreement with Canada's Teck Resources. This isn't just another corporate consolidation. It's the birth of what will become one of the planet's 5 largest copper producers, operating under the new banner of Anglo Teck. Frankfurt traders showed their enthusiasm for the Canadian partner even more dramatically, pushing Teck Resources shares up a staggering 21.7% as the market absorbed the implications of this mega deal. The newly formed Anglo Teck entity will plant its corporate flag firmly in Canadian soil, establishing its headquarters north of the border while simultaneously pursuing listings across 4 major global exchanges: New York, Toronto, London, and Johannesburg. This multi-continental approach signals ambitious plans for truly global reach and influence in the critical minerals sector. And this is the part most people miss. The ownership structure reveals fascinating insights into corporate power dynamics. Anglo American shareholders will command approximately 62.4% control of the combined operation, leaving Teck stakeholders with the remaining 37.6% slice. Some industry analysts are already questioning whether this merger of equals label accurately reflects such an uneven ownership split. But both companies are standing firm on their terminology. In their carefully crafted joint statement, both Anglo American and Teck emphasize their vision of creating exceptional and enduring benefits for Canada. They're positioning this deal as establishing a global critical minerals champion headquartered in Canada that will bring strengthened Canadian leadership in critical minerals on the world stage. But critics might argue whether such corporate consolidation actually serves national interests or primarily benefits shareholders. What's your take on that? Meanwhile, French political instability continues to dominate European headlines as traders maintain their vigilant watch. Bayrou's centrist minority government collapsed after losing Monday's confidence vote, a outcome that seasoned political observers had widely anticipated. The Prime Minister's fatal mistake was his inability to secure crucial support from opposition parties, spanning both right and left ideologies, for his proposed 2026 budget framework, specifically designed to tackle France's alarming budget deficit crisis. This confidence vote failure now forces President Emmanuel Macron into the uncomfortable position of selecting France's 5th Prime Minister within an incredibly short span of less than 2 years. Political insiders suggest Macron will likely opt for another centrist ally to helm yet another minority government. But how long can this revolving door of leadership continue before French voters demand more substantial change? Across the Pacific, Asian markets demonstrated predominantly positive momentum during Tuesday's trading session, while overnight U.S. stock futures remained relatively stable following the Nasdaq Composite's record-breaking performance on Monday. This calm before potential storms reflects the cautious optimism many investors feel heading into a data-heavy week. American investors are laser-focused on upcoming inflation measurements that could dramatically influence Federal Reserve policy decisions. Wednesday morning brings the highly anticipated U.S. Producer Price Index report for August, followed immediately by Thursday's Consumer Price Index release. Two critical data points that could either validate or challenge current market expectations. These inflation readings carry extra weight following Friday's surprisingly weak employment data, which sparked renewed investor speculation that the Federal Reserve might be more inclined to reduce benchmark interest rates during next week's policy meeting. But here's the million-dollar question that's dividing economists right now. Will softer job numbers actually translate into meaningful rate cuts? Or are we setting ourselves up for disappointment? What do you think? Is this Anglo-American tech merger truly a merger of equals? Or are we witnessing a strategic takeover dressed up in diplomatic language? And more importantly, will this copper consolidation ultimately benefit consumers through improved efficiency? Or should we be concerned about reduced competition in critical mineral markets? Share your thoughts. The debate is just getting started.